Patrick, I remember a day, 2018, 2019, 2020, when you and I were going to Alberta every single month, and it was impossible to motivate anyone to do anything at that particular time. Times are different now in Alberta. People are excited, they're motivated, they're doing things, they're doing deals. It's nice to see that province back in action.
It is. But having said all of that, I want just think about what it was a few years ago in Alberta, how quiet it was. Well, now Alberta's on the other side of that downturn, whereas the rest of the country is well into it. They're up to their neck in the downturn. So, and Alberta is kind of oblivious to it, although things are starting to change in Alberta, JG, and we got to talk about it.
So on today's episode, we're talking about the Liberals. Are they finally going to work? We're going to find out. We're diving deep into MLI Select. We're talking about Alberta. We're talking about Ontario. We're talking about BC. We're talking about realtors and them running out of signs because there's so much supply, and so much more on this episode.
Let's rein it in. Like, subscribe, comment. How do you see what's going on in the world today? Politically, economically, let us know. We're going to talk about it. Let's rein it in.
All right, Piff. Which one do you want to talk about first? We'll talk about the Liberals. We'll go to carbon tax.
That's a short conversation.
Sure. There it is, right there. That was it.
Yeah, that's it. What's to talk about? They're finally going back to work. They're, in the House of Commons, and they're just there long enough to put a new Speaker of the House in their quirky kind of way. And they're going to be there for 3 weeks, and then they're taking the summer off. I mean, we don't need a government for the summer. Gosh, we've got nothing going on in this country.
Totally, 100%. Now, Patrick, I just want you to put yourself in, you are a business owner. Let's just say you just hired a brand new employee, okay? And this employee, typically they want to prove themselves in the first, couple months, couple years, like they're really going to work extra hard. What would you and how would you react if an employee came to you and said, listen, I'm going to be on the job for 3 weeks, but then I need to take the summer off? How would you react to that as a business owner?
well, something that's interesting. I've actually had that kind of scenario show up. Now, if I'm really optimistic about the employee, I'm going to accommodate what I can do. And let's say, okay, let's work it out. But when it comes to our government, what can we do? I'm not optimistic. I would punt them. But anyways, it is what it is. Here we are where we are. And we'll see what Mr. Carney can pull off. He seems to be the boss. We'll see what happens.
Now let's segue that into carbon tax. So this is one of the points that the carbon tax came off, or it was shifted around. It was taken off of consumers, put onto businesses. I think it was January or December, Patrick? I think it was around there. It was towards the end of last year. Here we are 5 months later. What's happening with the carbon tax? Are we going back to where it was? What's the current state of affairs on this?
Well, what it is technically it's a pause. Like they've stopped the carbon tax, got it. They say it's not coming back, but they haven't taken that particular policy, if it's a policy, off the book. So in other words, they could fire it up again anytime and be okay with it. So it's not like they erased it off the sheet. It's just there. They're not initiating the tax. So that's where it sits. So it can come back anytime, but it's interesting that what has it done for gas prices? Alberta and Ontario prices have come down. British Columbia, I paid $1.76 or $1.79 a liter for regular gas the other day, which puts the mid and premium grades up over $2. Interesting too is that diesel was $1.57, which is the first time I've seen in a long time that diesel was less expensive than regular gas here in British Columbia. Anyways, I love going to Alberta, as I've shared many times. That's just one giant factory outlet. So from my perspective, I love going to Alberta for that reason.
Now, and let's be clear, Patrick, in your Lamborghinis and Ferraris, the only thing you're putting in there is, the premium 94 plus, I'm sure. But all kidding aside, though, Patrick, where do you think this goes from here? Do you have any foresight or forecast into where you think it goes here? What do you think they're going to do with the carbon tax? Because this was a situation this was something that was kind of a very hot take, if you will, during the election, and the Liberals did what they did in order to win the election. Now that they've won the election, curious to see what they're going to do going forward.
Well, who knows where it's going? But I mean, ultimately, the argument for carbon tax was that it had no effect on inflation or prices, which is just such I mean, it was such a gaslighting comment. But having said all of that, obviously prices did come down when they dropped carbon tax, at least in I'll use everywhere but British Columbia, I think. And that just goes to show you just how much the provincial governments have an impact on the cost of doing business in any particular province. And EB is he's a big climate change guy. He wants to get rid of everything, but I don't know. I think he wants us to run on coal and electricity. I have no idea. Natural gas, like, it's crazy. In Vancouver, you can't build new with and use natural gas for heat. I think even your stove. Yet, there's Kitimat. It's nonsensical. I can't keep up. I'm not trying to figure it out anymore. I'm just left scratching my head, wondering what the hell this government is doing. And I don't care whether it's a provincial government or federal government. I don't think anybody knows what the heck they're doing, other than we see the economy continuing to take a nosedive. We see unemployment rising. We see things slowing down. GDP is soft. Really, the standouts are the Western province, specifically Alberta, Saskatchewan, and Manitoba. Those provinces seem to be doing well. Different governments, so we'll see.
Prairies are doing well, and that's about it appears. Now, hopefully, Edmonton takes home the cup. That would be awesome. I'm voting for that for sure. That the Edmonton takes it home today. Today's going to be, when we're recording this. This is now game 5, so they can take home the conference final tonight, which will be fantastic. By the way, my operations manager, Jason, might be at that game tonight. So that'll be kind of cool. So if he gets to see that. Now, you just touched on something, Patrick, and I want to rewind here, because from the stage at Expand 2 weekends ago, I made a bold claim. I talked about one of the things we do at Vistor is we build coach homes in 88 days, which is rocket fast. From the day we have the permit, 88 days later, that tenant is in there, it's rented, it's done, it's leased. And that's pretty fast, because the average builder probably takes anywhere from 6 to 12 months, and we're doing it in 88 days. But my claim, and this is what I said from the stage, so I want everyone to hear it again, is our vision at Vistor is that we're going to be able to do this in 5 days in the future. That's what we're gearing towards. We want to start a project on a Monday. We want the tenant moving in on the Saturday, which means it's got to be done by the Friday, which means it gives us 5 days to do an entire cojo, which is a bold claim. I'm 100% there. But in order to kind of check this out, Patrick, and prepare myself for this, I've been doing a lot of research on how they build in other places of the world. Did you know that they can build a 10-story building in parts of the world in 28 hours? I mean, that's incredible. Yeah, I've seen it with my own eyes. 10 stories, it all clips together. It's absolutely fascinating. It's phenomenal. It's built in a modular setup, and then it clicks together kind of like Legos, if you will. So it's a combination of modular, really, really cool engineering, and then assembly on site. But yeah, 10 stories in 28 hours, which is cool. So then I got thinking to myself, what's it going to take to do that here in Canada? Can we do modular? 100% we can, for sure. There's a lot of great modular builders out there. I mean, we can, at Vistor, we can figure out how to do this stuff. Just takes a little engineering. So what else is going to stand in our way? Oh, the Ontario Building Code is probably going to stand in our way. So let's go digging into that. So I've been doing some research and seeing how forthcoming the government and specifically these building codes are to these kinds of technologies. Naturally, the sticking point's going to be the regulations. That's the bottom line. And where I'm going with this conversation is some of this stuff already exists. And you know how much that would drastically reduce the cost of housing if we could build a property that fast? But it won't happen because the regulations are in the way. That's why I'm a big fan of eliminating regulations, because they just add so much cost, and those costs have to be transferred to the consumer. And that's costing everyday Canadians more money.
Well, yeah, 100%. But, and we do have a direct comparison. Again, we go back to Alberta, Saskatchewan, Manitoba, how quickly they can build. Now, they're not building stuff in 5 days and 28 days, et cetera. But the fact is that they're building it for far less money than Ontario and British Columbia. So when you think about what the consumer is paying, so where it gets a little bit kind of mixed is that everybody's anticipating house prices coming down. And at the end of the day, if you look at what the cost of permits and zoning and tax and all the rest of it is happening in Ontario, I think it's just shy of 30% of the cost of a property, and even British Columbia, and the length of time that it takes and the cost associated with that length of time. Can property prices really come down that dramatically when you consider the cost? Now, the other side of this is they want to add that. So that's that part of it. So then you just talked about being able to build in 5 days. The question is going to be, will we have the demand or the requirement to do that? So in other words, as much as you can build really quickly, where's the demand coming from? Because right now, if you consider, listings are at, I don't want to say record high, but they're the highest they've been in 20 years in Ontario and British Columbia. We'll use that as an example. So you've got these, a lot of listings, but there's no sales. And let's just tell, how many listings are there, JG, in Vancouver, Lower Mainland, Fraser Valley? They run out of for sale signs. Now, they have access to them, but it's not like send me over for sale sign. It's like, okay, there's nothing selling and listings are continuing to go up. So realtors are struggling or having difficulty finding for sale signs to put up on these listings. That's the first part. The second part is that there's so many listings coming on board and sales are so flat that the realtors are adding to the contract that you sign with them a clause that says if you pull that listing early, they're charging back to you their marketing fees. That's going to be anywhere from about $2,500 to $4,000, depending on the listing. And it could be far more than that if it's a really high listing. But what's happening is sellers are coming on the market. They're saying, I want XYZ price. And if they're not getting offers, they're not willing to lower their price. They're going, no, I'm not lowering my price. I'll pull the listing. And the realtors are going, well, hold on. I just dropped $3,000 in advance to get that listing up and marketed. So these are the things that are happening in British Columbia and Ontario. And by the way, anybody from Alberta who's listening to this might be oblivious to that reality, because in their world, things are slow, but they're slowing, but they're not that bad.
It's kind of like back when we were going there in 2018, 2019, 2020. In Ontario, everything was booming. British Columbia was booming. You go to Alberta and be like, wah, wah, wah. Now it's the opposite. Now you go to Alberta and they're just like, life's great. Everything's fantastic. Build, buy, buy. And then you go to BC and Ontario and it's not the same story. Interesting though, Patrick, you talk about the fact that, so much of housing is taxes. So much of housing is the cost put on by the city and the regulations. And the numbers are truly, truly staggering. And you know what? The average public has no idea. My brother, who's involved in real estate, I take my brother along the journey with me. He's been investing with me for 15, 20 years now, and we talk about real estate all the time. I mean, he's not in the trenches like I am, but we talk about real estate all the time. And I remember him calling me because Polyev put out a thing during the election about how much of housing is taxes and how much is regulations and how much is actually like material costs. And he called me and he's like, is that true? I was like, that is 100% true. And he's the guy paying the bills for this stuff. And I said, Mark, his name is Mark. I said, Mark, look at that project we did in Aurelia. We are almost $200,000 into that project. We haven't put a shovel in the ground. We don't even have a permit yet. That's just fees to fight the city to get a permit, which is ridiculous. And that's the reality of housing in Canada. And until that changes, the price of housing is going nowhere but up.
Well, go up. It might be sideways for a while, but up. But what's interesting about it is that when you look at the tax proportion of any given deal, the government is making more money than anybody. So in other words, they're collecting more tax dollars, more costs. We'll call it all tax. It doesn't matter if it's a permit or whatever. More costs, and they're making more money than the actual builder. So when you look at your financial statements, let's say you come out of a deal and you're up $100,000, you go, woohoo! Well, you made your $100,000. The government collected $270,000 in taxes and permits and zoning and whatever else they got. And oh, by the way, they also collected tax on all of the people that built the project, all the lumber that got sold, all the supplies that got sold, all the services. They also collected tax on that. So, do we really think that the government wants prices to come down and or for us to stop building? Can you imagine? And this is what's happening. What's interesting about all of this, of course, is that in the major centers of Vancouver, Toronto, there's no real new projects coming out of the ground. So where is the tax revenue going to come from if we're not building or building is slowing down, this becomes a real dilemma.
Yeah, and there's going to be some big changes around this. I in the next couple of years, I think. But you're absolutely right, Patrick. That's why, and everybody knows I hate condos. But man, if you think that you want to own a condo personally in the next 10 years of your life, if you think, it'd be nice to own a condo in 10 years in Toronto, it is time to go shopping right now in Toronto. Right now, you're going to get some incredible deals. Is definitely You're going to get a $1.2 million condo for a steal of a deal. Is it going to be 700? Is it going to be 800? Is it going to be 650? I don't know the exact numbers, but the point is, it's going to be a steal of a deal. And in 5 to 10 years from now, there's going to be a huge shortage of condos, I believe, Patrick, because you know why? Because they're not building right now. So you can see this stuff coming far and far in advance.
Yeah. Okay. But there's a fundamental problem with all of that, right? We have to talk about interest rates. So when you look at what is the cost of carrying that condo, as good a deal as it might be, are you going to be able to get any cash flow? No. Ultimately the rents in Toronto proper are coming way down, and there's just so much supply on the market right now, and they're small and all the rest of the story. But interest rates, how are you going to carry that deal? So do we see many are calling in the Toronto market specifically, lesser degree Vancouver, many are calling for a huge shortage in 5 years because there's nothing new coming out of the ground. Stuff coming to completion, but no new projects. So the point is that they're seeing a shortage in the next 4 or 5 years. So you say, okay, well, if I'm going to play that game, I'm not in a hurry. I can do some grinding. I can get some great deals, but then you got to carry it. So let's talk about interest rates. Interest rates are going up. The fixed rates are definitely going up. We couldn't have made this call 3 months ago, but as we're looking at what's happening, bond yields are spiking and they're going to continue. Right now, the call is that they're going to continue to rise. And I think it will, in fact, get worse. For those who aren't paying attention, the Russia, NATO, US, that war is starting to fire up, and now Putin and Trump are pissing in each other's cornflakes and really annoying each other. I don't know where that's going to go. All to say this is that, inflation is going to continue to tick up. Bond yields are going to continue to tick up. I don't see even variable rates coming down too much. I think June 5th, which is next week, when we'll do a show afterwards, but ultimately I think variables are going to stay the same. If they do come down, it'll be a quarter. This is a balancing act because we know that unemployment is spiking in Ontario, and Ontario is our major population. And if Ontario ain't happy, ain't nobody happy. So when we start to see that inflate or that economy start to implode a little more, it's going to be felt right across the country, JG. There's no good news. What the hell? Can't we find something fun to talk about?
I don't know. I really wish, Patrick. Listen, you're the data guy. I mean, go find me some good news. You know what I mean? Like, you're the data guy.
Dude, I looked for good news. I can't find any. I saw a cat got saved from getting run over by a car, and there's just no good news economically.
Speaking of cat, and I don't know if it's Caterpillar or if it was Bobcat. Actually, I think it was Bobcat, the heavy equipment company. They released recently a full electric excavator, and a big one, like a 20-ton. So anyways, you said cat, it made me think of that. I know, side thought. But anyways, full electric excavators are now coming to the market, which is kind of interesting. But Patrick, come back to what you were saying for a second, because we went all over the place here. But unemployment, yes, it's ticking up for sure. Your Patrick prediction, if I understand this correctly, your Patrick prediction is rates are staying the same June 5th. Is that your Patrick prediction? Make a bold statement right here, right now, buddy.
No pressure. Hey, for what it's worth, I think they're going to stay the same. I don't think they're going down, although I think they need to. There's no question that we're heading into recession. And arguably, we've said it many times, depending on where you are in a recession. So there's no shifting that. And so I think Bank of Canada has to look at it. Inflation is just a weird number right now.
But this is my point. So Bank of Canada, they're caught between a rock and a hard place, because they want price stability first and foremost, which means they don't want inflation more than 2%. That's what they say. That's their claim. By the way, where did they get that 2%? Some guy many decades ago, like several generations ago, decided 2% was the number. So they've been sticking with it ever since. But Patrick, what is happening with inflation right now? Because if inflation's on the rise, they might increase, which would hurt the economy even more, but they might increase in order to protect this price stability that they will die on their sword for.
Yeah, it's an interesting dilemma that the Bank of Canada has. They could increase rates, they could, but they'll just definitely take the economy into a nosedive. The thing about inflation right now is it's not something that they're not controlling inflation, they're controlling consumerism. So in other words, if the interest rates go up, people will stop spending, and that isn't going to change the cost of goods. My point is that interest rates were not at the effect. It's a, how do I explain this and get the thought out of my head? The point is that inflation is inflation. The interest rate increase that we have here in Canada isn't going to affect the cost of goods because we don't control the cost of goods. All we do, and all the Bank of Canada is doing, is controlling the consumer. And so if they raise interest rates, people will stop buying, but prices will not come down because that's not what we're at the effect of. Don't forget, we're importing most of our stuff. So raise rates here in Canada doesn't affect the cost of goods coming into the country.
It's interesting, Patrick, because this is, as you said, they're caught between a rock and a hard place. And for some time now, we've been talking about how interest rates have been coming down. We've been talking about it since it's been a year now. We've been talking about interest rates coming down, and they've been slowly, especially the variable rates, been coming down, and fixed rates are coming down too. I just signed 2 or 3 or maybe even 4 mortgages under 5%, Patrick. And these are these are good. These are not even A lenders. These are like good, solid B lenders, and I'm getting them for 4.75 to 5.75. 5.75, I think, is the highest I just recently signed, but I just signed a huge one at 4.99. Point is that, what's changed is the conversation I'm having with my mortgage brokers on a weekly basis is they're saying, listen, the rates you're seeing right now are probably the lowest you're going to see for some time. And if you have a 3 to 5 year window, my mortgage broker is now advising you should lock in right now. If you're comfortable with the returns you're getting at this rate and you want to avoid instability and you want to avoid the ups and downs, and for many properties, we're okay. We'll ride it out. For some, where it's like, let's just lock it in. It's a decision we get to make as investors, a decision the viewers get to make as an investor. But point is that the story has changed for the last, almost 12 months. We've been saying it's going to come down, it's going to come down, it's going to come down, it's going to come down. That story's changing now, Patrick. It may not come down. My question to you is, what's going to happen when they start feeding more money in the economy? Because that's coming next. It's already started.
100%. Well, it's been going on. It's just going to increase. Well, of course, assets will, inflate, continue to go up. Just by the way, I was just in the bank yesterday, Bank of Montreal. I've got 4 mortgages with them, and these 4 mortgages are actually starting, they're coming due, I think, in September or October. I was having a conversation with a lender there, and I happened to be in the bank. Anyways, long story short, so we sat down, I sat across the desk, and she pulled up my screen and looked at this. The good news is that these mortgages are very, very low. Loan to value is about 10% or something ridiculous. I bought them down. But the point is, she gave me a pretty good deal at 4.49. I think she offered.
Wow.
Yeah. So
on an A lender, that's pretty good.
That's pretty good. I thought that was pretty cool. And so anyways, the long story short is that's about as good as it gets. And I didn't sign any mortgage docs yesterday. I'm kind of still sitting on the fence, to be honest with you. I don't think they're going to come. I don't think fixed rates are going to come down, but I don't know. I've also had the option to just go pay those off and be done with it, not worry about it anymore. I might do that on those properties.
Now it is definitely, investors have an interesting decision to make, and Patrick, you're in a unique situation. As you know, my loan to value on my entire portfolio, I think, is sitting at 48%, which is really, really low. But there's a lot of people, Patrick, that aren't in that fortunate position where they have much higher loan to values. And this stuff keeps them up at night. This has never kept me up at night because I manage it really tightly. So I don't stay up at night wondering oh man, if the Bank of Canada raises their rates, I'm going to be underwater. But that does worry some people, Patrick. What is your advice for an investor that may be worried about that?
Yeah, so let's get, let's talk about this. So when you consider the fact that right now Alberta, if you're in the bubble called Alberta, Saskatchewan, Manitoba, you think the world's all good, real estate's awesome. If you're in those provinces, you have no idea, or very few people have a real view of what's happening in Ontario or British Columbia. So there's a fundamental, though, that's happening. We're already seeing Calgary get softer. We're starting to see rents soften. Of course, that condo market, we've been talking about that for 4 years. The inevitability of the condo market coming off the rails in Calgary is happening. No surprise. But having said all of that, Edmonton, by the way, everything seems rock and roll in Edmonton. They're coming to the end of their boom cycle. Calgary's going into the beginning of their slump cycle. And again, when we describe boom and slump cycles, we got to be careful because the languaging implies things that really aren't that. So yes, Calgary is slowing. That's the top of their slump cycle. It doesn't mean it's going to get dramatically worse. None of that, but it is in a slump cycle. So having said that, Edmonton's coming into it. So back to the MLI Select, back into interest rates and lending. We are going into a very uncertain market. And while opportunities are going to be showing up everywhere in terms of great deals on properties and properties that cash flow, by the way, this is not the time to over leverage. So I just spoke at another event this past weekend. Multifamily, we were talking a lot about multifamily. Of course, the MLI Select program is the program. And, lots are looking at 5% down, 50-year, 40-year amortizations. And I'm going to caution people as clearly as I can. If you want to do the 5% down, 50-year am, got it. But do not leverage your last dollar to get that 5%. In other words, if you've only got that 5%, I would actually step away. Go get another capital partner. You need liquidity going into that market, or in the next year or two, next year, 2, 3, you could find yourself upside down. Liquidity is key in these markets, JG, and you don't have cash and you're just really setting the risk bar very high.
Yeah, well, I think you nailed it there, and that's sage advice from an old bull. Patrick, we would call you the old bull in the business, and definitely sage advice right there. I agree 100%.
But let me add one thing to this, JG, just before you go. And why do I give this cautionary warning? Number one, I've worked with, spoke to, like literally thousands of real estate investors over the past 25 years. I myself have been investing, and here's what happens in these kind of markets. Curveballs come at you that you do not even anticipate. And I'll share one example of that was we had a mortgage on a multifamily, a 15 unit, and it was in Grand Prairie. I knew it was coming up for renewal. The mortgage was coming up for renewal. We had the mortgage with ING. And about 12 months in advance, I had another reason to phone ING. And as I got him on the phone, I go, hey, by the way, while I'm on the call, what do I need to know about renewal on this particular building? It's coming up. It's not for another 12 months, but should we talk about it? And he literally just went, oh, we're not renewing that mortgage. I went, what? And he goes, no, we're not doing any. So monoline, we're not doing any mortgages in any small centers, and we're not renewing this mortgage. And I'm going, are you kidding me? Well, this was in, I think, 2010 or 2011, maybe. So after the GFC, we're still feeling the, the fallout from that. The point is this: it took us 10 months to find another mortgage for that building at the time, and I had to scratch a check for $250,000 because that was the max that they would finance on that deal. So I had to top it off for $250,000. So my point is good news is I had access to the capital. I had the capital. We wrote the check, no problem. Stressful, no doubt. But it was like 10 months later, they still weren't going to finance that deal. So if I wouldn't have had that capital, we would have been in trouble. No question about it. But I did. And so that was the good news. So I have the experience, and I've had that experience on more than one occasion. That just happens to be one that popped into my head.
Patrick, like I said, that's old bull wisdom right there. That's old bull wisdom. But and I 100% agree with you, because a lot of times these MLI Select programs, what happens is people get caught in a situation where they run all the numbers up front, it all makes sense, everything's fantastic. Then they go do the build. Let's just say it's a new build project, or they go purchase the asset. Then the appraisals come in at the end. Well, the market volatility does what it does, and your appraisal may not come in at what you forecasted. And that delta right there, that difference, that's what you got to scratch a check for. And that's what you're talking about, Patrick, where a lot of people say, listen, this all works, no problem. I can do it fantastic. But then you get an appraisal that's, $100, $200, $300,000 less than you were expecting. And you got to scratch that check. Yeah. If you don't have access to it, you're in deep water, and it's going to be very, very difficult for you to get that deal, to finish that deal. And it's at a very tenuous time. So I love what you're saying, Patrick, and you're absolutely right.
But it's so interesting, though, Gigi. I want to just shine a light on a couple things. Number one, opportunities galore. We know that at some point the printers are going to fire up again, and we're going to see asset prices continue to rise. So we see the opportunity there. Here's the thing about it, is that we don't know the curveballs the bureaucracy is going to throw at us. It's like, so go back in the day, I've ranted about that. Tip Macklem looks into the camera, goes, they're going to be really, really low for a very long time. We're not even thinking about real, go borrow money, blah, blah, blah. And the bureaucrats are not attached to policy change. In other words, they don't care how that policy change affects you. They pretend they care. They don't care. So the end of the day is that when we over leverage in these uncertain economic times where people are sitting on their wallets and access to capital isn't as easy, we get a curveball, a policy change, and we're at the effect of it. So the astute investor will always look at that and say, where are the potential risks? And right now, we've finally got a government that's finally going back to work for at least 3 weeks. It's only been a year. So we don't even know what they're going to come out with. And we have these global macro issues. Now, of course, what we're seeing happen, by the way, is investors are just off on the sidelines. Real estate investors in general.
That's what I was going to say, Patrick. I was going to say, I agree with your assessment, and you don't want people to over leverage. I get it. And I'm 100% on board with you on that. But in this typical market, that's not usually the problem people have right now. They're at, in most places, the ASM cohort, the Alberta, Saskatchewan, Manitoba cohort, they're in a different cycle. But the rest of the country is a pretty not so great part of the cycle, where the early parts of the recovery, if that, most people are sitting on their hands and knees, sitting on their wallets, so to speak, not doing anything when they should be doing something if they think real estate's part of their long-term play. Typically, people get overzealous with their capital and start over leveraging when they get towards the top of the cycle. So people are probably doing that in ASM right now, Alberta, Saskatchewan, Manitoba. That's probably where that's happening. Would you agree with that, Patrick?
Yeah, 100%. I 100% agree. But I believe because those three provinces have good leadership overall, I think we're going to continue. They've got a lot to offer in the commodity space. Alberta specifically is expanding in what they are relying on economically, not as much oil and gas. Yes, it's still a major part. And if that got shut down, and if Carney moves forward, or whatever, Guilbeault decides that is no longer a thing, it's going to hurt. But at least we have options in Alberta that is beyond just oil and gas. So that's a nice change. And, when we look at Alberta, though, do you know that they just peaked, they just crossed the 5 million population number. So if you look at between Alberta, Saskatchewan, and Manitoba, there's only, 8 million people, maybe, of all of Canada. So, we don't really move the needle when it comes to, voting, et cetera. So we send a lot of money across the country. That doesn't seem to hold weight. I don't know where I'm going with that conversation. But the point is, Alberta, Saskatchewan, Manitoba continue to do well economically. Ontario, BC, not so much. We're seeing unemployment spike up in British Columbia as well. And if you got your two big provinces slowing down, that's going to impact the bigger picture. So Alberta, Saskatchewan, Manitoba, pay attention to what's happening outside of your province, because things will start to slow down. You will be at the effect of it in the coming months.
I'll end on the MLI Select conversation with this, Patrick, because I know a lot of people are excited about that program. And the way I run the math, and I'm going through that MLI Select process as we speak. By the way, massive pain in the ass. I mean, it's unbelievable. I hate all of it. And if the numbers didn't work so well, I wouldn't do it. Honest to God, I wouldn't do it. It's so much work. It's fees up front. It's appraisals this. It's energy audits that. It's a bunch of bullshit. I hate it. But the point is, if you can get through it, it's great. What I do though, and this is the advice for real estate investors, is I run my numbers on conventional financing. And if the deal makes sense on conventional financing, I go forward with it. And then I try for MLI Select, but I'm not betting on MLI Select. Why? Because I would never bet on the government. That's a bad bet. And MLI Select program is run by the CMHC, and I ain't betting on that. So I bet on the conventional. I know I can get the deal done through conventional. If that works, I go for MLI Select. And if I get it, fantastic. I'm happy. It's a huge celebration. If I don't get it, I go back to my default, my plan. And that's where sophisticated investors, right, Patrick? Plan A, plan B, plan C.
That is exactly it. And it's a great point that you brought it up. You have to have a plan B and a plan C, for sure a plan B. You're kind of putting it out there if you don't have some kind of a plan C. But if you're relying only on plan A in this particular environment, given what's going on, it would probably be an oversight. I think the thing that you have to get to, JG, around all of us is that this is a great time to go hunting for deals. And, this is so interesting that people sit on the sidelines because, the hype of a boom cycle isn't there. They're the same individuals who are saying, yeah, when the market slows down, then I'll get in. And now the market's slowing down. They're going, are you crazy? The world's coming to an end. Don't you know that, real estate prices are going to crash and burn? And, at the end of the day, we're going to see prices off, but we have to look very specifically at property type because condos are throwing the numbers way off. So many in Ontario / Toronto, Hamilton, all of it.
It's both of those. It's condos and it's Toronto and both those things are massive parts of the market. Because if you look at the average property I own, appraisals aren't down. They're a little softer than they were, but they're not really major down. My rents are definitely not down. I mean, a couple bucks here, a couple bucks there, but nothing major. Not like the shit you're seeing in the news, that's for sure. But Patrick,
hold on. Before you go there, I want to point out something. Down compared to what? All-time highs.
100%. Yeah, 100%. Totally. And is it a bad thing? No, it's fine. It's no problem. It's all part of the business. I mean, you definitely shouldn't be losing sleep over it. I agree with you. Now, I think I'm going to dub this, Patrick. I think I'm going to dub this the Old Bull episode. That's what I think I'm going to dub this. And let me ask you an Old Bull question. Listen, you've been through how many of these ups and down cycles? Like many of them. You've been around for 100 years, dude. But at least 100 years. Do you find it's different this time? I mean, really, think back and think back to like the 2000s, the 2005, the GFC, the 2015 in Alberta. I mean, shit, you've seen a ton of these cycles, half a dozen. I just counted quickly. Is it different this time? Are people acting differently? I've never been through it quite like you, so I don't know.
Okay, so first and foremost, I would say that it's not different in a lot of ways, and it is different in a lot of ways. So first off, I think this is the fifth, we'll call it recession. I'll call it what I believe it is a recession. And the difference is that we have so much more access to information than we've had in the past. Even if we look at 2008, 2009, if we go back to that time, we didn't have access to the information that's out there. I believe so. Back to, has it changed? No, technically not. We have a lot more access to information. We're seeing a lot more of the headlines and of the news and all of the things that are going on. But I think the real shifts are societal shifts. When we look at the polarity and the divisiveness that's happening within just our kind of social fabric, if you will, that is not making things easier as well. When you look at the immigration, when you look at the who immigrated into this country. So those are dynamics that we've never faced before. And we've certainly never faced, at least in my lifetime, the degree of global kind of uncertainty, the global macroeconomic.
I hear all of that, Patrick, and I agree with you on all of it. But I think all of that actually comes back to what you said, which is just access to information. There's just even on the global, the macro, all of that stuff is just like there's just a plethora of information, and people can get lost in it, and they do get lost in it. As a result, they do nothing and they miss out on the next big wave. That's my take. That's the young bulls take right there. Young bulls take.
Stay out of the fray and enjoy the day.
Boom. Well, ladies and gentlemen, hopefully you've enjoyed this old bull episode number 65 of Rein It In. Patrick, thank you for doing this. It's been a lot of fun.
Thanks, JG. If you enjoyed this episode and you want to hear more of what JG and I have got, check out our last episode. It was epic.